Everyone, hopefully having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through, do our daily technical analysis update on commodities. We're going to go through the dollar, yields, precious metals, and commodities ETFs that I follow. I'm going to interject my financial opinions as we go. And if you need help with anything, check out finding-value.com, where I dive deeper into the individual companies, the individual sectors, and you can see what I'm buying. I did purchase a couple of companies today. So if you guys are members, you can go in and look to see what I purchased. I think they're at pretty good locations, in my opinion. One of them is a big dividend yield payer. So let's dive in there today and see what's going on, and I'll share my opinions. We've got the DXY here. That's where we normally start. And I still think this looks pretty dang strong. I do not see any sort of signs of turning lower, at least not yet. Yes, we have a little bit of resistance. It almost looks like a crude oil chart, to be honest. Crude oil and the dollar and yields are all interconnected. But I don't see much selling pressure yet. I think it's just consolidating to some degree, and we'll probably work our way on up with yields going up. We've broken the longer term downtrend line here, and things still look good to go higher at the moment. Yields, they were down a little bit today. I get it, but it's just consolidating. It looks to me like this will eventually break its way on out to the upside. And a lot of the times you get a lead in with a big flag pull. That's your flag pull. And this will be your flag consolidation that will eventually break to the upside. So could we get increasing yields where the Federal Reserve increases interest rates? This is pointing to a possibility of yes. That's what it's pointing to. And I think crude oil will be the driver of that, and obviously consumer price index and other things. And we are seeing liquidity come on up to some degree. We are seeing the manufacturing indexes that we watch also bouncing. We've got the 10-year yield. It tried selling off today, but was bought back up throughout the day. There's your selling pressure in the morning, but then was sold off throughout the day. So I do think that this is still sitting above support and still could go higher. Let's watch it over the next few days and see if that actually materializes. The 30-year yield also sold off in the morning. There it is in the morning here. Boom, like it was purposefully bought up in the morning, so yields fall, and then yields were sold and faded the entire part of that day. So again, we'll see if we can break through this trend line on the 30-year and get above it, or if we're going to fail here and work our way lower. If it were to fail here and we were to go lower, usually you see a strong down candlestick that closes strong, but we didn't see that today. That's evidence that we could still break to the upside. TYX TNX ratio going basically nowhere. It still looks like we could invert though. You can see these big red candlesticks. We could still invert for a little bit, and we have been inverted for a long time. And I think everyone and their mom is calling for a recession, a slowdown, the economy can't handle it, and that the yield curve will uninvert. It just hasn't happened yet. And they have been wrong for a period of time, all of the people who think that we are going to continue or we're going to go into a recession, those guys, the recession callers. This still looks good to do an inversion of the yield curve here. That's a flag pattern with a big pull there. TLT bond prices, this still does not exude confidence in bond prices here. This looks weak. And we've come on down, but there's no big buying pressure for bonds here. I don't see it. It looks to me like we could head lower still. And then the 2 and 10, yeah, we inverted a little bit, but for the most part, guys, we're just staying inverted. We're staying inverted for a very long period of time. Gold up about $5 an ounce. We are running out of steam here. We're getting a couple of wicks at the top where you can see that we're kind of like coming to some decision point here. Got a couple of wicks. That's not necessarily a good thing because we could get a little bit of a consolidation pullback that is possible here, and Wicks are generally downward selling pressure, that we've got some resistance here. So we're up against resistance. We'll see if we can make a move higher. If yields go up, it's possible we get a consolidation in gold for a little bit. A consolidation like this, which we very well could be doing right now. Silver up 1.27% is what I'm seeing. Is this kind of a consolidation that we're going through? Yeah, we're going through it right now, consolidation. If yields go up, it could consolidate further. But right now, the momentum is up, and we've broken out of this resistance trend line here. So I have to be bullish on it, guys. There's no other thing that I can be except bullish. It looks really good. Platinum, I got pretty excited. I thought we were going to break out here. And we got a little bit of resistance still, where we pulled on back. Now I'm looking to see where this low gets formed. We've had higher and higher lows, and we'll probably put a low somewhere in here soon, and hopefully take another run at that resistance level. So platinum looks fantastic. I mean, this thing is squeezing like a beast. Squeeze, 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 and then fly off to no man's land. But it's squeezing up. It does look good. Palladium, it's also working its way sideways. It's basing itself out. Um, Palladium isn't in the same setup as platinum. Platinum's already done a bunch of basing. I think platinum looks good to try to rip it at some point here soon. XEU to gold ratio up a little bit for the gold and silver mining companies, keeping pace with gold. We've broken this downtrend line here, guys. And I'll be honest, guys, I have to be bullish here. I have to be bullish. You got to be bullish when you need to be bullish, and you need to buy a lot when the opportunity is there. When gold and silver mining companies are cheap and nobody likes them, that's where you get all the rewards, is to take the risk when no one else is willing to buy it. I think it still looks good. A lot of the chart patterns look good in the gold and silver mining companies. The CRB index continuing to work its way on up. I think it looks fantastic, guys. We're right up against resistance. We're probably going to break again. That is a bullish pattern, which usually breaks to the upside. It looks fantastic. And CRB in relationship to the S&P 500, ripping it, because the S&P 500 was taking a little bit of a deucer today, doing a little bit of a Cleveland steamer. But yeah, it's moving on up. CRB is outpacing the S&P 500. I think that we are in that 2001 timeframe where, I've been talking about, we're earlier than what a lot of people think. And this is your wave two bottom, I think, potentially. And we are starting, hopefully, a big wave three where commodities start to rip against the S&P 500. GDX up a little bit. We're up against that resistance wall. It looks like it's going to try to make a run at it. And if gold gets its butt moving, we'll see if we can break through. We're still in the flag pattern for GDX. GDXJ is already broken out. And again, everything looks good here, guys. I don't think that we're going to sell off too bad here. We just have these two little weekly candlesticks that it's a continuation pattern that I've seen. It usually goes up. And SILJ's got the same two little consolidation candlesticks. So you get these stair step little sell-offs. I call them, they're flag patterns, and everything looks good. We've got crude oil. I know last night, I think, everybody got all bullish because potential war, and then they pulled it back. I don't know what the heck's going on here. I'm not in crude oil for war. I think war will be an outcome where crude oil, because of crude oil, and because they need something to blame and all that other stuff. But we're coming into driving season where I think the markets are going to get tight, and I think crude oil is going to go up. So that's kind of my stance. And if war breaks out, it's only going to be an afterburner to the upside. TTF gas down 5%. This thing's got some volatility. My Lord, it does look like it wants to sell off a little bit, maybe do a retest, but it's at a basing. It's been basing a little bit here, and I do think eventually it'll work its way on up. We're just getting some volatility around maybe this war and what the heck's going on. Nat gas in America, it's just chilling at a really cheap price. It needs to pull back on production. We'll get it. Just give it some time. Our boy XOP, yeah, you know me, not looking too bad today, guys. This is a bullish, piercing, bullish engulfing pattern where we could start to work our way on higher, sideways to higher. We're coming back to some support. There's some support through here. So we're coming back. We're saying, hey guys, what's up? To previous buyers. And psychologically, they're saying, well, yeah, maybe I'll pick some more up. That's exactly what they're doing. They're picking some more up. That's your support. That's the psychology behind it. And we're back at this neckline. Everything looks a-okay for this to continue higher for XOP. And OIH doesn't look too bad either. It looks like it's trying to put in a bottom. I like it, guys. I like it. Nice little bullish piercing. A lot of the times this is where it initiates the beginning stages of a bottom. Sometimes it rips. Sometimes it likes to do a couple more sideways action or throw in a little chart pattern. But I think it looks good. And I think we'll try to work our way on up here. Sprott Physical Uranium Trust. We are down a little bit. It's holding on. Are we going to get pulled down with the overall market like the NASDAQ and the S&P 500? I don't know that answer, guys, but it is looking a little bit weak for the short term. And I don't like seeing a rising wedge, a breakout to the downside with little green candlesticks. So that still screams that we could go a little bit lower in the short term. The projected move, a lot of the times it looks something like, I'm just going to do this here, something on the lines of like this. It could go down a little bit more, or even down to there potentially. That could be a retest of the breakout, maybe not that far down. URA again with seeing URN or the Sprott Physical Uranium Trust. I don't see a ton of buying pressure yet. It is in an uptrend though. It is in an uptrend. URNM also just moving sideways. It's holding on. We're at support. We'll see if support holds. URNJ is doing the same thing. We're at support. We'll see if it holds. But right now, it's just resting on support, and it's not a ton of selling pressure. But again, we're not seeing the bullish engulfing yet, and that's what we're waiting for. We're just waiting. TAN, this thing is broken to the downside. Looks pretty CRAP crappy. That looks like it could go lower. Copper still ripping it. just ripping it, guys. Just absolute rip. I love it. Copper's looking fantastic. COPX didn't want to join in, I guess. Looks like it's consolidating here. We'll see if we get a break. That pattern seems pretty common in like oil and some of these other ones. Like we're just kind of consolidating here. Lithium down a little bit. It lost its lower yields, so it's not really doing much. REMX doing the same thing. Lower yields is good for it. Higher yields it seems to pull on back. The S&P 500 continuing to pull back. It doesn't look that great. We'll monitor it. We'll see if we get any bounces. NASDAQ looking like complete. Yeah. Like I said, we squeezed up, we went sideways, and we're getting all these distribution candlesticks. Here, here, here. I'm like, this thing's ready to fall, guys. And here it is, selling off. And yes, we could go lower if yields continue higher. This doesn't look too good. So we definitely could head lower here. I don't see the strength here at all. KRE. Oh, KRE is looking actually pretty good. Nice little bounce here today. I like it. Looks like it could go up. Looking good. Looking good. We've got emerging markets that's holding on in this support resistance zone. We've got XHB pulling back a little bit. The whole, we are short homes, period. We're short homes. It's just nobody can afford them. So what are they going to do? If they lose the stock market and they lower interest rates, home prices are going higher, guys. And the home builders are going to go higher. They're going to go up because we have 5 million homes short. But in the short term here, we're going to pull back as long as yields are going up. So this is very interest rate sensitive at this moment. It wasn't in history. History, rates and home prices went up together. And then home prices, when they crashed, rates would crash with it, and affordability would go to the moon. Affordability gets tight when you're short homes, and that's where we're at. We have no inventory and we're short homes and a whole bunch of people want to buy, but they can't afford it at this moment with interest rates where they're at. Moo up a little bit today. We've got a lot of downside pressure here, so interesting to see where this goes. We might pull up and then have one last shakeout, kind of washout down to 60 something bucks, 69, 68. Iron ore, we're right up against resistance. We'll see if we can pop higher, get through this inverted head and shoulder pattern, which is a bottoming pattern if we get it. We've got nickel up 1.4%. I think this is bottom, guys. We're going to go higher here in nickel. I like it. I've got some investments around that, guys. And you guys know, if you're part of the website, what that is. You know what I like there. And then aluminum. Aluminum continuing higher here. Looks good. Up 1.8% from this basing breakout here. There's the base and then the break. And we still could continue higher. We had a little bit of selling pressure with some wicks at the top there. A little bit of selling pressure. Baltic Dry Index, it likes coal and iron ore moving up, so the Baltic is moving on up with it. You are correct. Newcastle coal up 0.5%. This is a good time to be looking at coal companies, guys. Coal companies right here. I like it a lot. I like it a lot. But yeah, it looks good and it's breaking. I think that looks really good. Bitcoin. What do we got with Bitcoin? Up 1%. Man, what is this going to do? Down here, breakout, and we're just consolidating. We'll see what we do. We could break lower here, guys, depending on what the NASDAQ. It keeps barfing. Ethereum also kind of in this flag pattern here. You know, this is a difficult one to look at because you get wicks on the bottom, which buy you've got support here. There's buyers. You came out of the pattern to the downside, and then you're kind of squeezing up here. So, you know, we'll see what if Ethereum and Bitcoin are highly correlated to the NASDAQ. If they are, then I still think we could go lower. That's what I'll say there. SMCI, which is super microcomputers, I've been going over this. We're using this as a test bed of my technical analysis, how well I do it or not, and a potential selling point in commodities whenever we get there. We're not there even close. But we are there for technology stocks, and we can monitor technology stocks to see maybe and learn what a topping pattern looks like or structure. I think that this is a topping pattern structure with a neckline, and it actually blew out. We had a nice little kind of false breakout to the upside here, but it blew to the downside today, and I'm sure it was on high volume. I'm not even going to pull it up. But where it started were these big selling pressure candlesticks. It started here. That is what you should have been looking at, is this big selling pressure candlestick. You're getting bigger red candlesticks at the top here. And then they get bearish engulfing here. It's like, man, this is probably going to top and start selling off. And here we are selling off 23% down day today. And that's what a top looks like. And this is probably coming all the way back. You'll probably get some sort of trap here, and we'll keep going on down. This top pattern here looks much like the topping in bonds in 2020, 2021. And then you've got an Elliott wave, and wave 4 goes sideways like this, and then you get a blow off top. That's a blow off top. That's what it looks like. That's what it feels like. Nvidia's doing the same thing, I think. You get your sideways at price action. This is 1, 2, 3, 4, and then 5's your peak. This is wave 5. And yeah, that's the shorter term movement in a big long term. Wave 1, wave 2, wave 3, wave 4, and then you go up. And this is probably the peak of all of it. That's the big picture view. So again, I'm not in this section here, guys. This is where people at the grocery store are telling you to go buy. Nvidia is over here. Bearish engulfing, bearish engulfing, bearish engulfing, bearish engulfing. These are screaming to get the crap out of there. We were down 10% today. The selling pressure intensifies. You get big red candlesticks. There was other signs, you know, Jeff Bezos, Mark Zuckerberg, the Waltons, they're all selling out of the stock market. That's, you know, they still didn't pick the top, dude. They picked the top. Good selling by those guys at least. And this does look like we could continue further to the downside. So we'll end it there, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Commodities are in the bottoming section. Like I said, the money's going to rotate from technology stocks that we're looking at here and the bond market. It's going to rotate over into commodities. This doesn't take weeks or months. It takes years. And I've said that for, since 2020. I said it's going to take time. And we're going through what I think is going to be a potential pullback in technology stocks. And that money's going to go and it's going to get scared out of it. And people are buying commodities. That's why you're seeing the commodity to stock ratio go up, commodities to the S&P 500. It's going up. You can see gold bottoming against the M2 money supply and all these other metrics that we're looking at. And over some years, it'll pick up steam. It is the hardest, most difficult time to hold commodities is during the bottoming pattern, which we're going through, because you're going to get lots of volatility. It's not going to be an easy ride up. You're going to get big pullbacks in the beginning of these commodity bull markets, and we'll pick up steam here. It's going to pick up steam, and then when we get a blow off top, everyone's going to be partying and seeing their counts add zeros to the end of it, and we'll be at a top like Nvidia, and that's where we got to make our exit. I mean, you make the exit in technology stocks here, and you could buy commodities, but commodities have been outperforming technology stocks since 2020. That's why they're coming off that bottom, and that's why I'm up as much as I am, 20, 30 times on my money in some of the investments, 10 times. Other ones we're getting in now, and I think that we're going to start a big wave three in commodity stocks. It's going to be a big boy move, and we'll have a lot of fun doing it, hopefully. But that's what I've got for today, guys. And we'll catch you next time. This is Finding Value.